everyone. Welcome back. In this session from our October Ask the Expert webinar, we're diving into a topic that's been on everyone's mind lately, tariffs. We'll look at how to decide whether to land your tariffs as part of your product costs or expense them as incurred. And I'll walk you through exactly how to set it up inside Fishbowl Advanced Inventory. So let's jump in.
So hi, everybody. Tariffs are collected by a third party. So the first thing we need to decide is whether or not we want to land our tariffs as part of our product costs or whether we want to just expense it as incurred. Typically, people want to add it as a landed cost. And so to do that, we need a part number. And because this part number is going to be on my freight forwarder's invoice and not my vendor's invoice, I need it to be a shipping type part number. Okay. And then I want to map my accounts, these two expense accounts, and the accrual account. I like to have an accrued landed cost account. The default for the shipping type item is accrued shipping. But accrued shipping is used in outbound shipping. And so I don't like it having my inbound costs and my outbound costs in the same general ledger account. So I created a separate balance sheet account for accrued landed cost. Okay. So tariffs get billed to us by the freight forwarder, just as freight, container freight, and what have you. So when we're in our receiving, and I think I have to start with purchase orders. All right, I'm going to take one. I'm going to issue it. And now I'm going to go to receive it. And I'm going to, for simplistic states, I'm going to say we received everything. Okay. Now we're going to come in and reconcile this to the vendor's bill. And so we'll have the bill number here. And our bill date is always the same day as the day we received it. And then on the next screen, it gives us the ability to add things that were not on the PO. Okay. So in this case, I'm going to put in my tariff part. And let's say my part was $800 in total. And then this little box right here is the money maker, right? This is add to vendor bill, but the vendor's not billing me for the tariffs. Okay. So I'm going to uncheck that box. And then I'm going to add any other costs I might have to add one way or the other. And then I have a choice as to how I let those tariff costs. So it is possible to buy something from a vendor and have only one or two items be subject to a tariff versus all of the items. Okay. And in this case, tariffs are probably based upon the value of what it is I'm getting. So I'm going to go next. And so I have my unit cost, which is coming from the PO. I have my build cost, and then I have my landed cost. Okay. And so in this case, I only landed that cost to two of my items. And now 20,500 will go over to QuickBooks as a bill to be paid to the vendor, and $800 will go over into that accrued landed cost account. My total value of the inventory would be 21,300. Okay. And I can pick and choose how I apply those tariffs, what casting algorithms I want to do with it.
And that's how you can handle tariffs and landed costs directly in Fishbowl Advanced Inventory for more accurate product costing. If you found this helpful, hit like, subscribe for more Fishbowl tips, and click the link below to book a free consultation with me. See you next time.